Boy, I stumbled into a rabbit hole this morning on YouTube because I hunting down all this indicator stuff and non-barraged with stuff, and coming back to the part 3 mini bank trading course. You want to trade like a bank? You want to manipulate price levels? This is the ticket. Day Trading Forex Live with Chad.
Sterling here from Day Trading.
This is Sterling. This guy emailed me and I made fun of his video. I'm coming back for a 3-year anniversary of making fun of this guy. So he emailed me and said, hey man, would you like to talk to our traders? And before I had a chance to answer, I'd already published my view of his trading. And I never heard from him again. As you can only imagine, I'm like, yeah, sure, hit me up. And crickets.
Trading Forex Live, and it is July 8th, 2013. What I'm bringing here today is just a quick video of
Bring it, buddy.
Of what we term as the confirming entry. Now, this is a very important video.
Now, this is, once again, confirmation. Yes, she does not have any communicable diseases. Let's get married.
It's a very important video from the aspect of entries. When it comes to identifying
Oh, boy, yeah.
what the banks are doing, and then
Let's identify what the banks are doing. So this morning, just to see if fundamentals worked, I called my bank and I said, what are you guys doing on Sunday night when the market opens?
putting that in a package where it'll allow us to take an
Open like that guy that was talking to NBC and they had to call the DNC when they're talking to NBC. Yeah, I'm just trying to get intel.
entry off that information. That's where the confirming entry comes into play. And so the confirming entry,
I wonder if I hack into their routers if I can see the trades they're about to put on. They haven't put them on yet, but they're thinking about it because they're looking at level. They're all looking at each other's trades. Hey, if level 2 works, I wonder if they're looking at each other's stuff going, oh, you gonna? Like a Mexican standoff.
entry is
Oh, is he gonna move? Oh,
one of the entries that we teach in our strategies and in our course and in the room. And
in the room too? Dude, I teach outside on the beach where I have my palatial estate from all the pips I made.
there's videos and articles on the confirming entry, but what I wanted to do is do a more updated version of that.
Well, of course you did. And here we're listening, and I'm playing you back at I'm 75% faster than reality. I sped this guy up. You want to hear what this guy really sounds like? You want to blow your brains out? Are you impatient?
That's really what we're here for today. So we'll get right into the video and get right into why it's useful.
That's why I sped him up. Just saying. Call me impatient. I am. I'm not in denial.
That confirming entry is useful. Well, from
That's another thing I realized, that I want to get a fucking trade on, dude. I want to put something in the market like 8.5 pips deep. Just like, come on, come get me.
the standpoint of those of you that are not members of Day Trading Forex Live and are not part of the Day Trading Forex Live community, if you're familiar with the site, then you probably view Chad's commentary each night.
Chad.
One of the most important parts that you
Chad's his butt buddy.
have to understand with the commentary is that Chad will choose multiple levels.
Chad's a top.
Now, those multiple levels are not going to be as selective as what we choose in the review and what we go over in the members review, but it's still a very good selection of points based on previous manipulation to identify
Previous manipulation. It looks like, honey, what's the scar over here?
where the banks could create that manipulation from. And so,
What kind of boyfriend did you have?
with that being said, the entry is not taken when the market just goes into a level. We don't just randomly take the entry.
Why not? We're going to get more confirmation. I mean, what's the point of a one-night stand? I mean, if you're going to sit there and show the family photos, we got time for that. Let's hit it. I'm renting this room by the hour.
That's where the confirming entry comes
I'm
into
a scalper.
play. So if you've seen the commentary,
If you're a scalper, you may be renting girls by the half hour.
and you've said to yourself, okay, well, the market's gone into this level. How do I know to take the entry or not? That is where the confirming entry is one of the tools that we use, a very good tool, and we'll get into that and kind of explain the basics.
Yeah, we reach for our pliers and we strip the nuts on your car. You know, we have a bunch of tools here. They got a little lag to them. They're not precision fitted. No. Metric? Inches? What? Get out of here. We're using pliers. We're just whatever. In fact, it doesn't even have to be a hex nut. Anything we can get a grip on, we're going to turn it.
So we'll behind it. So what I've done here is I've drawn a level of one spot 5,000, just a random number. Obviously, that's probably where the pounds at are in that area.
It's a round number, though. I mean, and it also is very round because it 2.0, those are giant numbers. And then at 10.0, and then at 100.0,
I guess the euro was at 1.5000 at one time. So the point is, it's just a number on a chart. So let's just say we had chosen this as a high probability point. So let's say this is maybe one of the
high probability point. God, these people are such pussies. It's a high probability point. Well, we're scared we're going to lose money. Are you fucking kidding me, man?
points chosen in Chad's.
They wonder why the people, the banks. I mean, gosh, this is like so funny to hear somebody that's. What happened to these people? This is the mini bank trading course. I want the maxi bank trading course, please.
In Chad's commentary, or maybe it's one of the points we chose in our daily market review for the members. And how do we know to either take a trade at this point or not? Well, assuming the market is below this level, what I'm going to do is I'm going to pause the video and draw out a scenario of what would happen as the market comes into this point, and I'm going to draw out a valid entry. So let's do that, and then we'll walk through it.
A valid entry. Now, I think I did a video about this before, as I recall, but just in retrospect, to just debunk this whole ridiculousness of even these candles, how this guy doesn't have a clue how to trade this shit. We don't even know what time. I don't think we know what time frame this is. Maybe he's going to tell us. I don't know. It just pisses me off.
Okay, so basically what I've done here is I've drawn out a standard confirming entry. This is one way that the confirming entry can set up. And as you can see here, I've labeled 3 of the candles: candle number 1, candle number 2, and candle number 3. So anything not labeled is really just for illustration purposes. It just adds to the picture of what we have here, and is really not all that critical. So
now here's where you just want to cherry pick. How does he know candle 1? Why does he start counting here? Oh, because this is the level he chose. Okay, that's why he's starting the count. So he's starting the count there. Apparently, the amount of that wick doesn't matter to him, because he has no money management.
What's labeled is really the critical part, and that's what we're going to be looking at a little more in depth. So this is obviously a shorting opportunity, and let's just say that in this case, Chad or I were looking for a second push down in the market. Remember, we trade based on market cycle. If you're not familiar with that, there's a lot of information on the site based on market cycle. You can check that out. But
market cycle, more bullshit. It doesn't matter, man. Market cycle does not matter to the person that sold here. They sold this. Here's the vacuum fill. They start selling here. They put a sell limit here, and they put a sell limit here. Okay? To that person that has a stop that can withstand that, I don't know what time frame this is. How this is what's critical. This hole that's left behind. Here's the hole to fill. It never fills. Like, this just goes on forever, straight up. Every candle on this thing matters. One exists because 0 exists, because -1 exists, because 2 exists. Well, where does this cherry picking of fractals begin with these people? How can they not see the flaw in their lot? They have no fucking trade plan. They have a single entry confirmation. I guess the blue candles are up too. Don't forget. This closed down. It opened here. I prefer this to be filled in or something. Another problem is the candle factor. So if this is a line chart, it's really hard to imagine this is a line chart. Looks something like this. And blue doesn't mean anything for the... So here's your big doji. Because this... apparently it opened up here. This must be a stock or something. I don't get how the market opened up here. This was Sunday night, right? And then we go down, up, and we would just, on my chart, I would just fill this whole thing in. So this is all that matters. So I just took more ambiguity out of it. So I think psychologically speaking, I know what people think about candlesticks, but these wicks are are very important. The edge of that wick, you can't de-emphasize the high and the low of the day, which candlesticks do. Because a skinny little pencil neck, right? This is like a Schiff candle. The more you fatten up this wick, so you can just go on the internet, look for fat candles or something like that. I'm sure people have done this. It's subtle things like this that will make your whole world change. At least it did mine. Right, this is straight across. This is a shaved candle. Inverted hammer. What do you do about that? Another baby inverted hammer too. There's so much going on in this chart. And he chose this level, this price, put his stake in the sand there. At what point did he not realize that he could have sold here, sold here, sold here, with orders 7 pips apart, say. Big fat stop up here. Also intermingled, we have a big sell here with a stop here. Sell here with a stop here. Sell here with a stop here. And some guy asked on the channel comments, he said, well, why would you want to hedge? Isn't that just a way for the brokers to make money? Well, yeah, they're going to make money because you're buying more tickets. You're smoothing out your equity. So you're not going to see your equity make huge spikes. And same idea of running a trailing stop. You're hedging. You're gonna trade higher frequency. You can trade more trades if you run a trailing stop. So in a way, that's like light hedging. If you put your stake in the sand and say this is the center of the world for the next 10 years in this market, this is ground zero. We're going down from here and never look back. We're going up from here and never look back. Is that a realistic view of reality? Come on. Is anybody even trading a demo out there? Please, if you get lost, open a fucking demo and just fucking put on a goddamn trade and watch your equity. And ask yourself, how do you feel about that? How do you feel about this size you're in? So I'd recommend anybody that is starting out trading, ask yourself, could you risk $20 a week? Which means you could put a 1K on and not give a fuck for 200 pips. $20 a week. Oh, it's $20 a week. Should I spend that at the titty bar in one day? Oh, okay. So I have to moved it up to $100 a week. $400 a week, right? Whatever number. Let's say $100 a week is a safe bet, right? 1,000 pips stops, 1Ks. Pick a currency. You could pick anything. You trade the fucking Siberian Libra. You can trade anything. But just get that trade on and say, God, I'm down $16, man. I'm down 160 pips. I'm so wrong on this trade. I can't fucking believe it. Well, how's that different than anything else in your life? I mean, you go to some restaurant, people recommend you go there and you get food poisoning for the next 6 weeks. I'm sure that's happened to people. They're like, yeah, my buddy recommended this. In fact, our band was supposed to play at this bar, but the guitarist told us that, oh, well, we had a little scuffle there. Somebody didn't pay the bill. I guess we can't play there. You know, shit happens. Of course, this is the mini, let's get back to the on topic. The mini bank trading course. Oh, well, it's as easy as 1, 2, 3 also. Don't forget. And like this is so, you could spend like a week talking about just this data here alone, how to trade it. It would depend on what time frame it is as far as cycles go, but as far as time of it, I mean, the cycle stuff is so silly. It so doesn't work. I've done it. It doesn't work. Okay, you could say, oh, I did Fibonacci time zones. I've tried it all. I mean, I think I've got half a fucking brain that I tried it for like 1,000 hours. It doesn't work. 1,000 hours is not enough of a test. I didn't use a computer. I said, well, I got a tool. They call them tools. I got a tool here. I'll get a wrench. you're better to take a wrench that's rusted and broken and cast a nut that fits it, right? Backwards engineer it. And come to find that you have to have a huge library of licks, chops, techniques, modes, strategies. You can't say what is the best strategy to trade. It just wouldn't work like that. It's like, well, what's the best car to drive? I'm like, are you driving off road or are you driving on a fucking super flat piece of pavement? Are you in the autostrada or the autobahn? Or are you on a fucking some potholed fucking Rust Belt road in the United States? Something looks like something out of Beirut. What are you driving on? That's the first thing. And do you like the ride? Do you want to be on some thing where you get on a plane for 9 hours and you end up somewhere else? It's like a giant swing trade. Do you want to just go down to the corner and get a beer in 5 minutes? Okay, that's like, dude, we're scalping this beer. We are not investing in this beer idea. But if you go to France or something with your artwork and your satchel and you want to sell some shit that people have never seen because your interpretation is not clouded by the fact that you live in France, right? I mean, when people go from one country to the next, what's mundane in their country is spectacular in another country because they're like, dude, around here everybody's inside the own echo chamber of like, well, yeah, this thing and we'll never get ahead and woe is me and the banks. Like that the banks are out to get you, and it's so funny. They're hunting my stops, and I'm always saying stop hunt in the terms of that way of the how it's couched is the most important thing about a word, right? Where is it sitting in the context of? So when I say the stop hunt, I don't think anybody's hunting your stops, but it just feels like that because you have a stop in. So it's about feelings. Unfortunately, it comes down to trading psychology and feelings. How do you feel about getting filled on a trade that you've been told not to take because it's too dangerous? There's no confirmation. Right, so people have gotten married and made babies over the fact that they have love at first sight. They go, I'm just going to go with it. I mean, there's people that can do that. Now, if you're a person that's very picky, you may never find a fit, and nothing's ever going to feel okay to do. So about, I'd say 15 years ago, when I was in the commodity world, and they'd say, well, you have to, this is also another problem I have is commitment. So they say you have to commit to that trade. And I said, well, I don't really want to commit to that trade because I'm not sure where it'll work out. I don't want to be all in. I don't want to pick some moving average trading system and go, okay, well, I guess I'm just going to trade this like a fucking robot. And that was the, people answered with that desire, and robots came around and started trading the market. And it's true there are robots to trade the market. But there's also just the fact that when you come to the end of the exchange period and every hour that ticks by, it's about, okay, other markets are closing. And when they close, there is a dramatic little stampede to the closing because people want to go flat. Some people want to go flat into the night because they have to deliver this money, right? Don't forget these exchange rates are to facilitate, the fair value price going into the next day, whatever it can be, right? So if I'm low on inventory, it's like money's back ordered, and you see these big moves because there's a price vacuum. It's been back ordered. There's not enough supply, whatever, or somebody's not willing to step in and take the other side of that trade, so they just keep bidding it down or up. And so it's offered, it's a market. And people don't like that idea because I think a lot of people want it to be fair, but it's not. There's unfair value, then there's fair value. Fair value is when the market isn't a fucking doji. Everybody agrees it's fair value. There is no dispute. When it starts to go up or down from there, now you're starting to go unfair Or you could say it's on its way to getting fair. It's going to find a resting point. It's either on its way, but the order imbalance is what causes moves because now there's too many people on one side of the trade. There's nobody taking the other side of the trade. And so there's also orders that have piled up in there. I don't think the retail stop orders are fueling the market, but don't forget, there are people that are saying, they have a tap out. They may not have a stop, but they have an exit point. They're going to get out. They have a mental stop. Those people, they could be a small trader or a big trader, and they're going to get it, and they're going to fuel it the other way. As soon as they let go of their position, it becomes an order for the other side. The guy that was saying in the comments last night of some other video that, he's going to rip the markets apart. He's going to go after, like this kind of revenge trading, right? And I totally agree with that, except I don't think they're going to notice that you're ripping them apart unless you're stepping in. The market's so big, how can you step into that? And don't forget, it's not even got a central trading point. It's decentralized, but if you put up 5 brokers on 5 screens, the euro dollar is going for slightly different on each broker. You can arbitrage on a 5-second arbitrage. And once you get 4 brokers running, just get 4 brokers running on 4 different screens, and try to you kind of have to put the tick charts right next to each other because your peripheral vision won't let you, unless you have a really wide focus point. It's hard to really say, okay, and you have to have a hotkey keyboard or some kind of script ready. I don't know if you want to, because you're also going to have a button that gets in big and what button that gets in small. You could build a position and then dump it, and that's really high frequency trading. You can do it. I think most people are looking at this shit going, well, let me read some books first, and then you're scared. The beginning of most of the videos, they scare the shit out of you. Like, warning, risk. What? Oh my God! Like, you don't even see when you start your car every day in the mornings. It's like, warning, you might run over a small kid. So, I mean, the amount of fear about money, and do you have enough? And this guy's rich, I'm not. This is incredible. I mean, that's another thing that's so funny, because as if you make money and all of a sudden you're not going to be an asshole. That's not going to happen. So let's dive into I'm playing this back at the highest speed. Well, if I go 2x, it's going to be unintelligible because it's taken it out to, but we're at 1.75 speed.
But what we were looking for was a shorting opportunity in this example. And so as the market comes into 1500, as the market comes into this level here at the 1500 point, the question becomes, do I take the trade as the market comes into this level, or do I not take the trade? And as you examine the reviews or the commentary, that's the critical question that you ask yourself as you come into those levels. So the basis of the stop run and the basis of the confirming entry is that
So he's calling this a stop run for the bears, apparently. They've hit, we don't know what's to the left of us, but with that kind of, this kind of style of talking about stops, that they've hit this stop, they've stopped out all the bears, right? That this big blast here is a washout. So is this one, right? And I don't know if this is a real chart or a fake chart, because this looks a little bit ideal. There's something looks a little too simple about this chart. I don't know if it's a real chart. Another problem with these examples that people are using, put up a real chart, for God's sakes, right? I mean, we can all do the whiteboard, but that's usually for talking about position size and writing down risk numbers on a whiteboard, but I guess we could do the candles. But, this guy's he's just a guy. It's not like we're listening to George Soros talk about the bank levels.
High probability point that we've chosen gets broken by at least 3 pips or more. Now, why is that?
3 pips or more? Holy shit. So, man, that's only a 3 pip. Wow, this must be the 5-minute chart or something, right?
Critical. Well, our belief, when we choose a high probability point, we believe that there's orders sitting above the key level that we're looking at. In this case, we're looking at the 1500 level in just this example. And so we believe that there's orders sitting above that. Now, we walk through how we choose levels and why we choose certain points in the course. We're not going to get into that because it's a whole separate video.
So if you believe that there's orders up there, why isn't your order up there with them? And why aren't you selling on limits all the way into that stop hunt?
Again, there's already information on the front of the site for that as well. But we believe that there's orders sitting above that. So in order for us to visually see that smart money has taken the orders, we need to see them break that high probability point by at least 3 pips or more. That ensures us that stops were more than likely taken above that point.
But what if they don't go up there? See, sometimes they never do go up there. It just doesn't have enough gumption to make it into that.
So in a standard 3-candle confirming entry setup, this is one way where, notice how
in a standard 3-candle entry setup. So this is where you really lose your mind, because you'd have to write down the 3 candles and then, or the 4-candle entry setup, or the 2-candle, or 3 pips. Okay, I'm trying to write this down. 3 pips, 3 candle.
The first candle breaks that high probability point, and then
can't we just talk in concepts of like? Can you imagine any places you could get in this pattern here? And apparently it's only 3 pips, so I don't even know if it's worth trading the top of this.
Gets rejected back down below that high probability point. So that's what we term as a stop run candle. That candle, as the name implies, went above the area that we were looking for. So
it's a stop run candle. Then this is a stop run candle here. Right? This is a stop run candle. This is a stop run candle too, because that became if you sold into that on limits. So what if you sold this whole thing on limits? Isn't it obvious that if you sold up here in limits with a stop up here, that you've made these many pips, and looks like you just kept tanking and made pips all the way down? And you could have added on sell stops here. And what is the smallest candle on the chart? This one and this one. So your volatility hedge breakout. Some guys asking about hedging. Okay, sell stops, buy stops. This is a hedge trade. You only filled on 2 sell stops. The buy stops did not get triggered. So whether you're bullish or bearish, and we could just have easily gone up, because the same strategy here, hedging in a small bar. It's so simple. I guess it just is too simple. What I'm saying is too simple. There's only 3 trades. Well, there's only 3 candles. Sideways, up, down. Right? So if you have 3, so the market can only do 3 things. Go sideways, go up, go down. Now that's relatively speaking. What is sideways? How did you frame it? Are you talking sideways for 1 candle? I am. I'm talking sideways for 1 candle on here. And I also define sideways as low volatility. Small bars, sideways. Big bars are either going up or down. There's only 3 things the market can do. How are people putting so much into this? Because they want to make sense out of it in the so-called big picture. And they want to make sense of it in the small picture. But the people who want to feel safe want to see, where are they on the map? I don't know about you, but when I go onto Google Maps and I want to find out where a place is, I get anxiety till I zoom out, because I'm like, okay, but that's great. I got the crossroads of the little fucking street you're on. But where in the fuck am I in the big picture? And the more I look at Google Maps, the more anxiety I get, and the more drugs I have to take. Because I'm like, are you fucking kidding me? How about we start with the zoomed out? I'm going there. Everybody's going there anyways. What do you think? I'm fucking 5 blocks from your fucking store? Well, here's where we are. And I like when they have stuff in the old days. Since I wasn't a postal employee, I never knew the address. We're at the 1500th block of what? You mean in people's addresses? You ever drive a car and look at fucking addresses? People decided they want to get fancy with their fucking address. Well, our address is in script. You got to read it. Spelled out. Longhand. I think I just ran over somebody. So, at least the market, I must say, the purity of price, it does not look like noise to me. It looks like well, it's like if you go to the restaurant and you hear people just chattering in the background. The commingling of all that sound. I guess you call it noise. It's kind of soothing, actually, in a way, because it's as if the room's alive, although you don't understand what anybody's saying. And that's why the markets are kind of fun, because they're like alive. I mean, you can go from this currency pair to that currency pair, and you're kind of eavesdropping on a conversation. But not only do you want to know the conversation, you want to know where the conversation's going and what's going to happen to these people later, and I can check in. So it's also great if you're by yourself. And they say trading's lonely. I don't think so. I mean, I could look at charts and talk about market for hours on end. I have no. To me, it's just utterly fucking fascinating. Plus the projections that people psychologically put on top of price behavior or price action or price history or price volatility, which I don't think anybody likes volatility, although they claim, oh, market's dead, don't trade it. Okay, this is the time to build this is a time to build a position, whether it's small, large, or be anticipating the next move is going to be up or down, and try to argue both sides. Try to be objective, because when you put a bias that there is Brexit coming and don't forget we're at this price and don't forget this, it's so hard to have this simple rule list, because that would mean that if you lost money, you say, gosh, you know what? I'm just being too simple about this. So I met a guy the other day that's pretty dumb. Well, I don't say dumb, but he's very shy. He's probably smarter, but he admitted that he only has a high school degree. And I think I'd have to hand him an Android preloaded, or a Windows tablet preloaded, and say, okay, you see this? When you see this, do that. And I would have, if I could get an indicator that would actually, and this might be possible, more possible than a robot. I guess first start with the indicator. In other words, if you get a 20 pip bar on the 4-hour chart that you put a hedge on, non-directional, not just one hedge though. This is another missing ingredient in this whole thing, is that you're not building a car that can drive on a road that has a 30-degree turn forever in a circle. Now, if you did that, you would optimize the car so the inside tires would be smaller than the outside tires, and you'd make it so that the tires really didn't wear because it's always in a turn. And that's what you can't do in these markets. You cannot write a curve-fitted system because the market has no predictable curve. The Fibonacci golden ratio into the future, some guy was saying, it's so funny that, come on, man, that's how the universe is built, on the golden ratio. Yeah, but not every time frame you're on, not every price falls. And of course, if that's true, if you believe that fractals exist and you do use Fibonacci, then you got to realize at some point there is the internal Fibonacci, the Fibonacci inside the Fibonacci. And which one's the better one to trade? Well, the one with the tighter stop, right? So the one that's in the micro Fibonacci or the Nanonacci. And I don't know. I guess it's just that this is a mini bank trading course. Don't forget. And I'm sure this guy means well. I don't think these are evil people that are posting these videos. But it's just cute to watch their interpretation of reality.
The stops and was rejected back down below it. Now, do we take the entry after the first candle closes?
So I had the stops, and then it was rejected. And this another catchphrase, kind of this catch, the rejected price was rejected, and look at it went, or its approach avoidance and support and resistance is coming into play. Okay, but please tell me how to make money from this shit.
No. What we do is we then wait for the second candle to open. The second candle is what we term as the confirming candle. Now, the confirming candle has two rules, and again, we're looking at it from the example of a shorting from a short.
I hate rules. I just want to do what I want to do. Can we start trading now?
Setup, and those two rules are: number one, it needs to close below.
That would irritate the shit out of me. I'd read these trading books and they go, Rule 1. I'm already pissed. I'm already fucking like, this sounds like I'm getting in trouble in school again. You can't talk. Listen, you can't just start talking in the middle of class. I can't.
Below the body of the reversal candle. Therefore, in this case, candle number 2 would need to close below the body of candle number 1. It did that very clearly.
Below the body, not just below the body. In other words, it can't, and this is another fucking mind blower. It can't be below just the wick. I mean, in other words, it can't be an inside day. It's got to close below the body. Oof.
Clearly. And the second rule is that it needs to close in the lower 2/3 portion of.
And not only that, I did do a video about this. Not only that, the lower 2/3. Oh God, I'm writing this down, and that would be okay. Now we're it's a 5 decimal broker. The last candle was 3.8 pips. What is, and it was 2/3. Okay, I'm writing this down. And this is better than just trading the way I trade, like a fucking caveman.
That candle. The reason we use that rule is it just ensures that our confirming.
Ensures. I like that. Okay, we got confirmation insurance. Hey, can I get do you have airbags in that car?
Candle is.
I drive like shit.
Is aggressively confirming that reversal because.
Aggressively confirming. Oh, I love that. Not only are we getting assurance, aggressive confirmation, double confirmation, and I like it. Go for it.
Technically, if you look at it.
Technically. Now we're getting out of it. I knew there was technical analysis involved in this. People have been telling me about this that their technical analysis you guys using. It's how you building them rocket ships, aren't you?
And you were to draw this candle out a little bit differently.
It ain't rocket science, just trading. Oh, if you draw it out a little differently, so these are fake candles. Okay, now he's gonna destroy the whole chart to go for a second scenario.
Let's say you were to draw out the second candle like this, and that second candle looked something like what we have drawn out here. Notice how, does this candle close below the body of that reversal candle or below the body of the first candle? Well, yes, it does, but it's closing way up near its highs and is definitely not confirming the reversal, and that's why we want to see it close in its lower 2/3 quadrant.
Wow. So what he's saying is he wants to see, and what do we see here from my trading course that I don't have? We have a top becoming a bottom here. So people are buying that, and they're fucking making money. Isn't that crazy? Some guys making money from this coming in really deep. Plus, we filled this vacuum. Of course, he's got a fake scenario, but it's okay because it doesn't matter. It's just like a fake chess game. He makes a move. Robot makes a move. I make a move. Okay, let's go back to his video.
Okay, so by it closing its lower 2/3 quadrant, or the lower 2/3 of the candle, what that does, again, it just ensures that the reversal is stronger, and it confirms that more in our minds. So after the...
Ensures it that it's stronger, aggressive. I like where you're going, buddy. You're not gay.
Those two candles have closed. Technically, that is what we term as the confirming entry. And so those two candles represent what either dictates that the trade is valid or not valid.
Dictates whether it's valid or not valid. We have insurance. I like these words, these buzzwords. I'm feeling good about this guy.
And the question then becomes, okay, well, is the entry taken after that second candle closes? The answer to that is no.
Okay.
The close of the second candle, you may very well be about 15, 20, 30 pips away from the high of candle 1. So if we wanted to use a 20 pip stop and get our stop above the highs of candle number 1, and again, that's another topic of why we want our stop loss above the stop run high. Again, that's a separate video. But
how do you know that's a stop run high? How do you know they're not going to just keep busting that fucking north? I mean, if that's fucking certain, why would you even bother making this? I mean, you just be like fucking. I don't get it. Like, Now, no, they're not going to come after that stop because the stop runs over. Really? Okay.
We always look to use a 20 pip stop, and therefore,
We always look to use a 20 pip stop. At least he's talking about, thanks, we'll come get your 20 pip stop on a limit.
what we need to see is we need to see candle number 3 pull back to within 15 pips of the high of candle number 1. So very simple. All you'll do is you'll put your cursor above candle number 1, right at the high, measure down exactly 15 pips, and that's where the entry becomes valid.
Anybody see a problem with this on the guppy? What if the spread goes to 20 pips in a millisecond? That's this guy kidding. 3 pip window, 20 pip stop.
So depending on your scale, maybe this third candle would have to pull back to this point where the red line is. If
Pull back, you mean go up? I think that this is a pull up to me, but pull down, pull up.
it's a larger scale, maybe your third candle would have to pull all the way back to,
Maybe, sort of. This is not how you trade, man.
depth. That's all the way up to the red line where it's at now. So that's obviously going to depend on your
Too many rules. Too much. What if this? They're really going to depend on. I mean, if it all comes down to what it's going to maybe depend on.
15 pips, and that's where the entry becomes valid. So depending on your scale, maybe this third candle would have to pull back to this point where the red line is. If it's a larger scale, maybe your third candle would have to pull all the way back to a depth that's all the way up to the red line where it's at now. So
No, that wouldn't change any of this configuration. You would have to change every scale on that chart. If it closes here, it is above this close.
that's obviously going.
In every time period that goes by, there is a trade available for the right trade plan. Every candle has a trade plan. The close of every candle, not to mention the bigger picture, going out at least, put 20 candles on a chart. He's only got like 8 here. With 20 candles on a chart, you'll be able to see something completely different.
To depend on your scale, and it's going to depend on each individual setup. Sometimes at the close of the second candle, you're already within 15 pips of the high, and at that point, the entry again would be valid. The deeper the pullback, the better, but 15 pips within the high or closer, and the entry is valid.
Well, at least I give him this. He's picked a 15 pip, 20 pip stop, 15 pip window. He's trying to get in here. Now, how big are you trading now? As soon as you determine that you're always going to trade with a 20 pip stop, now size really does matter, because you can't do the other math where you go for a smaller position with a 200 pip stop and risk the same amount with a 20 pip stop. The 10K with a 20 pip stop is the same risk as the 1K with a 200 pip stop. And those are completely different trades, I suppose, if you're trying to put a 200 pip stop and you're trying to make 400 pips or 200 pips. Is it worth your while to place these orders? I mean, this guy's apparently scalping or something. I mean, he must be getting in pretty hairy if he's only got a 20 pip stop. He's in a 10K?
In the case of a long setup, you're obviously flipping everything I'm saying here and looking at it from an inverse situation. So this is one example of a confirming entry, but what I want to illustrate in this video is that the confirming entry can look a few different ways. And so what we're going to do now is...
If the confirming entry can look a few different ways, which some is the best ways that it should look? That's the obvious begging the answer.
I'm going to clear out some of the candles that we have here and draw it visually in a little bit different way. So let's do that right now. All right, so we've drawn this out a little bit different, but if you look at this, really it's illustrating the same principle, and that's what I want to really discuss with you right now before we talk about this. I really want to urge people to not get caught up in the candle patterns. No doubt most of you listening to this video...
Thank God, because I would sell all the way up in that regardless if I was selling at 1,500. And that the fact that this is engulfing now only means that I probably scalped out of something right to here at this point, right? Right to here. Right? I'm telling you what, man. You really want an easy way to... You want a nice, clean way to start trading on a demo. It's going to take some work. You're going to have to look for small candles and wait for them to form. On whatever time frame. Put a buy stop, put a sell stop. Non-directional trading. You're making money without knowing where the market's going. Then the aggressive thing is to say, I will sell a little bit here, but I'll sell more here because this is a bigger up candle, right? So a small up candle, I don't sell so much, and my target's not that big. When the volatility kicks in, here I'm buying big, but I never met my target It did go up after that a little bit. But I'm not going to buy this at the market because I'm not going to buy big at the market because it's not down very big. I've also got a trade plan for this bar. I got a trade plan for this bar. There's my hedge bars. Here's my market order bars. There's no other trade here for me. If I'm not getting filled on limit grids into this, I sell at the market. Plus, I'm short on, I've donated some of the account to capturing a grid entry. Market does three things. There are three trades available: the market order, the limit order, and the stop. The confirmation order is only available on small bars for stop entry.
Based on candle
The
pattern.
confirmation on limit entry is for big bars. In other words, I have sell limits here. I'm getting confirmed upon entry. Waiting for a setup means you're trading at the market, right? You're waiting for the setup. You pull the trigger. That's what this guy's doing. Or otherwise, wouldn't he just put sell limits up here and go, okay, Sarah, Sarah. And I know that this one cashes out here, this one cashes out here, this one cashes out. I'm going to lay a labyrinth in here. I'm going to put a fucking lattice in here. And I'm just going to pick up some shit up here. I'll also come in. And at the market also, here, we know we have to run tighter stops on small candles. So we can still buy at the market. Put a buy stop here. Confirmation, no confirmation, blended with confirmation. I sell at the market with a very tight stop. I have a stop above that. Right? I sold at the market. Yeah, I sold at the market. I may have protection here on another order because that is looking to make X on the way down. I have sell stops that get triggered on confirmation. No trigger on the buy stops. Another reason to hedge is this all or nothing thinking is not good. I just do this and I do that and I have rules and blah, blah, blah. No, you have to have three different techniques: market, stop, limit. Those are complete. I'm going to do a run through the playback of the market, rehearse trading on real data without even the market being open. On the weekend, it's time to think about rehearsing for next week. So when you look at the chart, you're not like flummoxed. Okay, you don't want to stand at the chart and go, "Oh fuck." No, you know where the market's going to, probably going to fill a fucking hole, right? It goes sideways too long. It's Wyckoff theory, cause and effect. The longer it goes sideways, the more dramatic the move is. And how do you even know that, relatively speaking, where we're at in the landscape of every market right now on the planet, we could be at a low volatility point? And I think we are. I think it's going to get insane. I think the wheels are going to come off. They'll blame it on Trump, of course, but the wheels are going to come off. I look at Venezuela. They can't keep the lights on. It's so cute. We're going to airdrop generators down there. But people are on the internet there. There's a lot of people that aren't eating their dogs. So that's going to be fun to watch. Now what? Let me continue. I'll never get through this fucking thing. I want to keep this under an hour.
Patterns. And I can comfortably say that nobody will send me a track record based off of a profitable track record based off of strictly trading candle patterns. And I'm not going to say
he's fucking right about that, but that's not true either. I could do that. I could do that if you want me to. It's a lot of work because, like I said, I could do the. Yeah, I can show you probably better than his system, but you couldn't live the way he's doing it, right? This confirmation, he's doing confirmation on candlesticks. He's really doing it wrong. I think each candle has so much data in it that you don't need the other candle. See, you have open, high, low, close in one candle, whereas in a line chart you have the previous time frame. In other words, it is a sequenced picture. It's an isolated 1 hour candle. If you show me a 1 hour candle, I'm like, yeah, obviously this is the trade for that right now. You kind of want to know maybe 3 candles back as far as the How do you know this is even a volatile candle? But each candle has a trade plan, right?
Say, really get into that one way or the other. You know from your own results what you've achieved with candle patterns. And that's why I really urge you to not get stuck on the candle patterns. The candle patterns simply show us visually what smart money is doing. But
what smart money is doing? Oh, kill me now. What is smart money doing on this chart? Are they the ones making the big moves or the little moves? Is smart money on the sidelines? Hasn't pulled the trigger yet? They'll tell you the smart money hasn't even gone in yet because it's just not, there's no confirmation. Is that the smart money, or is the smart money the one that's causing the setup that you're waiting for?
The real key behind it is the fact that our high probability point is broken where we expect the orders to be. They reject, in the case of a short, back down below that high probability point and confirm that the stops have been taken. So it's the action of creating.
He still has not divulged where he gets in the market. Notice 1, 2, 3, and he doesn't say, "Oh, we're going to get in here and stop. We're going to get in here at the market. We're going to get in here." No, he fucking went into different scenarios of like, well, if it was here, maybe it's here, and but you see, still to the fucking 12 minutes in, the fucker hasn't given up one fucking entry to us.
The stop run. That is the key part. Visually, that will look a little bit different. In this case, this is often what's referred to as a set of reversal legs, or more commonly
reversal legs. She's upside down. I like that.
Referred to as a set of railroad tracks.
Up against the toaster.
In this case, a set of railroad tracks back to the downside. So candle number
railroad tracks. Oh, yeah.
1 breaks our high probability point.
It breaks our high probability point. This reminds me of these fuckers like, I was watching that girl that stares with her eyes open. The blood test, mini nano blood test girl. I just came across. It's fucking laughable. She speaks in these platitudes like, yes, the endeavor distribution. I just don't. Why?
Closes above it, that's fine. But what we need to see from that point forward is we need to see the market
from this point forward
immediately reject it back down below that high probability.
Rejected. I hate rejection.
Point. And by rejecting it back down below,
how dare you reject me?
That shows us that they took the stops, ran it back the other way. It's exactly what we want to see, and the same as the other example.
That's what we want to see. We didn't participate in it. We want to see that, and then we'll get in. So we'll miss the top. We'll lose this.
Third candle pulls back. The entry is taken on that pullback. So again, same.
So we miss out on that fucking beautiful fucking mind-blowing entry above $1.50 because they're too big of pussies to get in the market. And he still hasn't said how he gets in this trade.
Same exact thing, just visually looks a little bit different. So let's show one more example. Last example here, what we see is typically what's referred to as a evening star candle formation, the long setup of the same.
Now here, once again, my system blows his away in candlestick. In range alone, you have a buy stop here and a sell stop here. Did you make any money? Yes. In fact, this would be your exit point too. Or you're adding to a winner. See how that easy that is? No trade here. Candle's too big. No trade here. This is also where you're going to buy at the market because it's down big, and which means you're cashing out of that in some manner. And when it goes smashing back up here, you're hopefully cashing out into the floor. See how easy that is? The only thing that's difficult is this a 500 pip candle or is it a 5 pip candle? That's all that matters. Why are people overcomplicating it? Because they love indicators. Trust me, if there was an indicator showing the gravity pressure on your car as you drove around, you'd be like, look at that. You have to have, to the millionth place, right? Sensitivity level. But hey, look at the gravity's increased a little bit.
Same situation is what's referred to as a morning star type candle pattern.
Morning star. Yeah, I love that morning star. I like the hanging man.
And again, the principle behind this is the key part. And what is the principle behind all three of these examples? The principle behind it is that they're going above our high probability point.
High probability point. Yes.
Taking the stops, and what illustrates them and what gives us the strongest clue.
Here, I'm going to see if I can get that chick up here. You got to hear this girl talk, man. She's like a Forex trader. Okay, so this is the interview with Elizabeth Holmes. Now listen to this chick talk. She sounds like a Forex trader. She's taking on a man's voice. This is the funniest shit I've ever seen. And this puts the Miss South Carolina to shame. Listen to the fucking way she talks.
In our country, 40 to 60% of people
That's a chick.
are not compliant with the requisition to go get a lab test done when given to them by a physician.
And then her voice goes up in tone.
Drops. It's a little tube. It looks about that big. In which we're billing for these tests and to engage in the testing process.
You got to hear this girl when she gets into it.
With Walgreens.
When she talks
on average and in metropolitan service.
In her platitudes.
That the service we provide is excellent. And so.
Oh, God.
Is really different from walking into the center. There's like calming music and, you know, like a water fountain or something.
Water fountain.
To the.
Get access to information about their body that can't.
Okay, here we go. This is when you just about die. This is like a Forex seminar.
And if we can connect with people so that they begin to understand that they have this basic human right to get access to information.
Basic human right. She's a supposed scientist that created this little mini blood test kit called Edison.
Information about their body that can change their life. We can begin to engage people in the process of finding some of this information out.
Engage people in the process of finding. And this, when people start to talk like this, I'm like, you're kidding, right?
Time to do something about it. So we have exactly designed an end-to-end solution.
We've designed an end-to-end solution. This is when people talk in fucking goddamn psychotically laced gibberish.
Which is geared toward being able to get people engaged.
Engaged.
Because engagement is the first step to knowledge.
Engagement is the first step to knowledge. And this is what we do here at the Mini Bank Trading Course.
Which then often can facilitate.
Somebody's got, you just got to take the greatest hits of bullshittery, commentary, adjectivery.
Behavior change.
Behavior change. That was epic, man. She must have rehearsed this in front of a mirror with her eyes wide open.
And if we can connect with people so that they begin to understand that they have this basic human right to get access to information about their body that can change their life, we can begin to engage people in the process of finding some of this information out in time to do something about it.
It's time to get the fuck out of this market because it's moving. My volatility alarm went off, and I thank God for that because I got the fuck out of the market.
So we have exactly designed an end-to-end solution which is geared toward being able to get people engaged.
End-to-end design. What the fuck is end-to-end design?
Because engagement is the first step to knowledge.
Engagement is the first step to knowledge. Like putting my car in gear, engaging it because I drove to the library. What the fuck is she talking about? And people fell in love with this bitch and gave her. She had $9 billion company. So it's no wonder people are falling for the Mini Bank Trading Course.
Knowledge, which then often can facilitate behavior change. I talk a lot about type 2 diabetes, which in our country, we have 80 million pre-diabetics, 90% of whom don't know that they're...
Oh, they know. They're fucking fat as a goddamn house. Anyways, let's go back to Forex.
Clue that they are taking the stops is that they quickly reject it back down below our high probability point. So one of the advantages to reading the commentary each day, and one of probably the biggest advantage of those in our members community is that we choose these high probability points for you. And
really? You choose the high probability engagement facilitation points for me?
Walk through why exactly.
I want to start talking like she does about the market, and I bet I have 1 million fucking views. I could sell a trading course. It's called High Probability Engagement Fibonacci. And I'll see if I can hold Mr. Robinacci, have him come on the show for like an interview. And you could tell us about the people that are watching him in the restaurant.
They were choosing each point. So as you're
They know that I know that they know that I'm trading Forex with Rob and Archie.
looking at either the commentary or if you remember looking through the reviews, when you identify these points, the principle is what you want to keep in mind. Don't get stuck on the candle pattern.
I'm stuck on the fucking candle pattern because I'm looking at it. I'm also stuck on the girl at the coffee shop that works there. God, why does she have to look so hot? Can't she get in a car crash?
Stuck on trying to chase these candle patterns is going to result in the same losses that you probably experienced with any other candle pattern-based trading strategy. So again, focus on the principle. When it comes into that high probability point, is it breaking it and quickly getting rejected back down below it? Candle number one again, or candle number two, the confirming candle, has two criteria. Let's go through those two criteria again. Number one, in the case of a short, it needs to close below
God, let me write this down. God damn it, I can't keep track of this guy's shit.
the body of the first candle. So in this
I'm playing it back too fast. Okay, wait. 2/3. Okay, what is that? 2/3. That's like 60%. Or what is 2/3?
type of setup, that would be your small bodied candle in the center. Criteria number two, in the case of a short, it needs to close in its lower
Fuck, slow down, buddy.
2/3 quadrant, or the lower 2/3 section of that candle.
Lower 2/3. Okay, it's not Fibonacci.
And again, what that rule does is that simply tells us we have a strong reversal candle or a strong.
The rule does that? The rule tells me? That's cool. Okay. Stop sign rule tells me that there's no traffic. It's okay to stop. It's okay to go now? Like I don't stop forever at the stop sign? Huh? Can I just roll through it if there's nobody around? How about there's a zombie apocalypse? Can I just blow off all the stop signs?
confirming candle, as we call it. In this example,
As we call it.
what's important to note is that in order for the confirming candle to be a confirming candle, it has to get back down, again in the case of a short, get back down below.
Into the buyer's den, and I'm at risk of getting a fucking... So you mean to tell me that I didn't take this high probability, low volatility breakout at the tippy top, and look at this little baby stop hunt. Talking about stop hunts, right there, the tippy top. Why didn't I sell up there? We just don't do that around here, son. What we do is we have a lot of confirmation. You don't see your mom running around drunk, do you? Well, yeah, I do.
That high probability point, as this very clearly does, gets well below that high probability point of 1 spot 15, 1 spot 5,000 that we have marked out there. Now, guys, one of the key things to remember with this is that this strategy, or this little section of the strategy, really at the end of the day, is a very small portion. This thing has stood the test of time. For the first 2 years of Day Trading Forex Live, Day Trading Forex Live was nothing but
Stood the test of time.
a live trading room. I mean,
Only because you had a 20 pip stop, dude. You're taking tight entry windows. I don't even know what time frame this is.
every single one of my trades was live, and at the core of a lot of those trades was the confirming entry. And so what helped me maintain that profitability over the course of years in front of everybody was using the confirming entry. So it's the combination of two. It's having the ability and the know-how to first and foremost select the correct levels. That's at the heart of it. If you're picking the wrong levels based on the criteria that we use, well then you're simply at that point you're just trading candle patterns, because you have to be able to select the right levels. But after you've identified those correct levels, and one of the easy ways to identify some decent points is to go into Chad's commentary each day. When it gets into the levels he chooses, does it validate this setup or not? Because
Chad.
the manipulation's job is to
I got to be Chad's pitch, apparently, to make money.
two things. If that level is not going to hold, then its job is to not show us a valid confirming entry setup. That level should just simply break and should never show an entry.
I like hiring people to have a job. So you may have people working. These tools are like, they're doing a job for me.
That's one job of the manipulation. However, the second job is if it's going to turn from that point, if they truly are taking the stops at that point, then a valid confirming entry should set up and should give us an opportunity to catch it. Obviously, it's not going to do it every time, but it's a happy medium between providing enough confirmation to not get burned.
I want to be happy. And I don't want to get burned by a banker. That's the last thing I want, buddy.
Enough confirmation to not get burned on a lot of false turning points, whereas not giving too much confirmation to force us to miss.
Well, isn't that the Goldilocks theory? We don't want to get trapped. We don't want to be the sucker. We don't want to be the only guy that doesn't know what's going on. But we don't want to wait for all the confirmation in the world when everybody realizes, oh, you know what? It's already moved.
So many trades. Another great principle of the confirming entry, or another great side effect, if you will, of the confirming entry, is it fixes some of the problems that a lot of losing traders have. Many traders that are struggling to turn a profit, they can know a strategy up one side and down the other, and they can watch somebody else profit with that exact same strategy, but maybe they don't turn a profit with it. One of the main reasons behind that is, aside from risk, reward, and money management, is the different psychological factors such as the patience to wait for it, discipline, and a solid trade plan for knowing exactly what to do as the price comes into that level.
But the truth of it is that people that wait for these ideal setups are never over trading. So they actually retain more of their money by not over trading, by taking every little candlestick pattern that they see. They are waiting for so much criteria that when they do get in, they have the other people have done 5 trades, and then they're finally getting in, and they're just making money because they have a 20 pip stop and they're doing this, and they don't always win, but maybe they're looking to make 80 pips with a 20 pip stop. We also don't know what his target is. So I do believe that the side effect is that you're not over trading it.
And
of all these rules.
the great thing about the confirming entry is that it forces you to be disciplined. If you are waiting
Because it forces you to wait for the ideal setup. That's psychologically the only bonus in this, honestly. It's not that, because if it really, really worked, you would just, and it's so, the way he spelled it, the criteria is so clean that it has to be here, it has to be there, 2/3. You could tell a robot 2/3. But for you to look at the chart and get out a pencil on a 1 minute chart and call out 2/3 is a little bit tough.
for exactly an exact confirming entry, a valid, clear confirming entry. And so it forces you to be patient. It forces you to be disciplined, and those are great qualities that make up any profitable trader out there. And so it's a teaching lesson without actually having to go through that process. And really, it teaches the lesson maybe better than you could ever do with words, because it's forcing you to wait for your criteria. When that criteria is satisfied, you're taking a trade. When it's not, more importantly, you're sitting on your hands, and it teaches you that discipline to do so, which is also critical for the profitable trader or becoming a profitable trader. Well, I really hope.
It's also like forced savings. When the government withholds a lot of your taxes, it's forced savings too. So
you enjoyed this video, guys. Again, do not get caught up in trading candle patterns. You will get burned. Trading candle patterns will result in the same losses it did for you before, and it will result in those same.
that's not true, because if you have a daily candles pattern, and fractally speaking, you have the 4-hour candle pattern. With those two candle patterns, you can see all sorts of this stuff. You can see low volatility. And at that point, the body kind of does matter. In fact, the ATR, I made an ATR called open to close. So basically, you're looking at the body. Instead of looking at the ATR in the range, you're looking at the body. It's very dramatic. So if you didn't want to look at the chart, you could just look at the ATR of open to close, which is very dramatic, because you go from a point where the market is not going anywhere. It's so dramatic. It's not, because with a high-low range, you still have a certain amount of pips. So I was trying to make a robot that would identify small bodies and execute at the market at the end of that small body. It's not waiting for a breakout. So it's another robot that I would have somebody build, or I try to build it myself. If we fluctuate less than so many pips up or down, or it gets a hedge going, it could also put on a hedge at the market with a small body. And you can see that if it's scaling out, it's getting in hard, it's scaling out, maybe it has a little micro soft stop, like every 0.2 of a pip, there's a stop. But I can play it back, and we could do live, we could play back the strategy tester and call out the trades. And this way, you would have either a playbook of trades, you have scripts you can use that are market stop limits. You know what to do when you see the setup, or you see the market per whatever time frame closes, And of course, you don't have to do that for the big giant trades that are sitting out there that are 300 pips below you and 500 pips above you. We know areas on the charts that there's going to be a fucking, that's the so-called battle zone, stop hunt zone, war zone, whatever you want to call it. There's going to be drama at those price levels. So I think he's done with his video, so I kind of ran over 8 minutes over my time here.
And losses down the road. The key is the combination. Being able to properly identify those high probability points, and then waiting for the valid manipulation.
Wait for it. Okay, so there you go. That's the, once again, identifying bank manipulation and Forex day trading strategy, which is not really true, because what he's doing is, I wish he was going to talk about the banks manipulating my money. Let's see if there's any mention of his, oh, here's that chick. Oh, that's Fleetwood Mac. So here's the let's see. I've got. I'll see if there's any comments on this. There's got to be, right? It's not political, so they haven't. It was first. This video's been up for ages. 5 hours ago. 53 bankers dislike this video. Oh my God. Thanks a million, Sterling. Your entry setup is consistently wow. And your in-depth explanation is highly appreciated. Thanks once again. And I agree with Chara of 100%. What is that? I wonder what the iceberg, your course, and chat room would be the tip of. So powerful. Wow, people love this guy. This is such an old video. Are you using market orders? That's my question is too. I do for the entry, but the exit is generally a limit order. I think he means the exit that gets stopped out. I always call that a stop order because that's what my broker calls it. For those learning to trade, I would recommend sticking with limit orders. It takes a bit of the emotion from the process, which I believe is a good thing. He did not say whether it was stop entry or limit entry, though. So this is another big confusion for me. If you want to add in a level of discretion around the entry and look for slightly deeper pullbacks, as I often do, I would recommend doing so after you're profitable and looking to improve. Why? Just do it now. Get used to life. Get used to life, man. Yeah, candles can hurt you. I always buy and sell. Look exactly the same till one wins. So manipulation will often distract you and take the money and run. So manipulation means volatility, apparently. It means the market's moving. It's being manipulated. Yeah, man's moving it. I couldn't agree more. That's why you have to learn to track the manipulation and trade during the very specific times that you can track and trade it. And what those times would be day trading Forex live. Agreed. Agree. Took me some time, but after seeing what I call main veins in the market, you can tell where money will be interjected, even with, well, it's sitting there. You know, people have pending orders in there, and people are aware of prices, and people have God knows how many limit orders in there. You then need to make sure you know how to track momentum. Why? Then you need to track manipulation. No, you don't. Then you need the balls to pull the trigger. Yeah, you do. Then you need to post push button plan for all scenarios. Yeah. Finally, you need to get discouraged or too confident. Crazy industry this is. Well, I guess that's if you wrote a hit song, you get very confident, and then you can't write it. You have writer's block. You know, it's like anything else. Hi, I want to ask: is this a good point to buy the pound USD because it has break all major support levels, and I think banks are into heavy buying in this stock. What do you say? So the bankers are trading like fucking retail people? It's possible, but I think it's hard to say for sure. No shit. I look for very specific info for a stop run, but that doesn't mean market manipulation cannot be seen in other places. With that being said, we have to be able to see it to be able to trade it. Well, you have to wait for it to happen, you're saying. So you don't want to trade it. You want to see it, and then you're going to stop in and come in. You're going to come in with you wait for a confirmation, then you're going to go. So while they might be buying into selling pressure, I think it's impossible to say for in a specific situation. Of course, naturally, we can't see every ticket on everybody's platform. Great job, Sterling. How would you enter knowing manipulation can take many, many candles? What is the entry of no return? Good Lord, this guy answers every question. We trade short-term test, high liquidity zones. Price vacuums, I suppose he means. Like any trading strategy, perfection doesn't exist in trading. With that being said, we look for probabilities. Since these setups are reversal setups by nature, we have a high risk-reward ratio. Therefore, we only maintain 50% hit rate. I'm going to do well. I linked the video below. Yeah, you should be getting 80% hit rate if you're putting manual orders in. Earning money hasn't been this easy before the arrival of this app. Guy's selling something. Let's see, many binary options. Okay, thanks for sharing. This goes way back. Pretty boring. Nobody loves them. What date is this? July 2013. Jesus Christ. My God, that's a while ago. Almost 6 years ago. Anyways, there you go. Identifying bank manipulation.